Good afternoon. It is December 22nd, 2025, and today I would categorize this as a, a trending range day or a ranging trend day. We gapped up yesterday, Sunday, up to a little over 69.05, and you can see basically from this high, which would have been on Friday, to the opening price yesterday. Basically, what we did was we trended down. We pulled back and tested the midline of that price level, or at least that gap, I should say. Tested it a couple times before going higher. Then we tested this level of resistance, came back down, tested near that 50% mark before finding support at the EMA, and then we went higher. So this is all overnight price action. Pretty strong move up to about 69.29. We'll just say 69.25 right here. Uh, and then we went lower. So this is the 1300 tick chart. I believe that if you were watching this, let's draw this, and let me zoom in too. I believe that if you were in here at market open, really, I think buying on a limit order near the EMA or even this trend line is very. I think that makes plenty of sense. You can see we're in a fairly strong bull trend. We broke out above this breakout point. I should say we gapped over this body, the body of this bull bar right here and this bear bar here. So there is a body gap. And so to me, that is a sign of a strong bull trend. So this is the first time you have a close of the body gap since then. It hasn't been very long, but still, I think because of that, we're above the EMA. Buying at the EMA and expecting some upward price movement is very reasonable. So you would have gotten a nice move out of that before it sells off. We get a break of that channel, and we form this flat bear channel here. So you wouldn't have this drawn until later. So let's look at the more short-term price action. So you do have this spike and bear channel down. Spike, bear channel. I don't think you really want to go short just yet. We just got below the EMA and we're pulling back, and this is a very choppy bear channel. So I think I'd probably be looking to buy. So I'd probably buy with a limit order anytime it gets down to the lower part of this channel, and you can see that's what a lot of people did. Another thing you could look at is, let me see, I think the Fibonacci retracements is F7. Nope. F8. Yeah, if you draw your Fibonacci retracements, you could buy at 50%. I mean, that's exactly where it bounced. So you could also just buy at any of these levels. And you can see a lot of people or a lot of computers, I should say, are buying at those levels. But a lot of computers are also just buying in the lower part of this bear channel. And I think it's very reasonable to do so. This is the first time we gapped below the EMA, so I think it's reasonable to expect a push above the EMA, at least one last push before perhaps coming down to these lows. For people who think that prices are going to fill this gap. So anyway, that bear channel fades and we form this bull channel. And again, not much strength here. There's no body gap here. And there's no body gap here. So your best bet is probably just buying limit orders near the trend line or near the EMA. But nothing very convincing. If you look at this as a double bottom, this low and this low, double bottom, higher low, you could look at this as a failure and go long above here. I didn't mark what I liked here, but I already talked about this bear channel. I think you could have bought this area over here. So yeah, I think it's, you could look at it this as a failure. And then we find resistance here. So you immediately want to draw the trend line, drag it down. So at that point, your level of support would probably have been lower. Yeah, and then we get this bear channel. So I think especially when this thing starts stalling, you have this bear channel drawn. We see plenty of range like price action. This could be a reversal and we could be going down. But other than this one big bear bar, there's not a whole lot of convincing arguments for the bear side of this. And you can see there's support there. So once we get an outside bar here, an outside bar here, and then an inside bar, I think that bear bar right there is at the close of that bar, you're buying low. And I think that's a very good bet. I think that's a solid bet. And you could draw the range and just make your risk a measure move of this range. And let's say you buy at 69.11. Your risk, let's just call it 3 points. It looks closer to 2. But if you go for the midline of this range, you bought at 69.11. That's a 6-point move. So that's very good risk reward. That's something you want to keep in mind. So you can see people took profits at the midline, but then it goes a little higher, and then we hit the resistance, and that confirms this larger bear channel, broad bear channel. And could you go short here? I think you would want to play it safe by selling on a limit order up here and putting it above this high. And I think that's a reasonable area to get short. Especially we got these small bull bodies, small bear body here, small bull body. It's not, yeah, they're reversing, but you want to see it go higher, and it's not really going higher. So it does fail, and it drops down, and we hit this level of support again. So look, you got an inside bar here, and then you get this bar that reverses. We're very far from the EMA. Again, I think the risk reward here is pretty good, but I don't think I would buy here until the close of this bar. So you're risking about 3 points, and yeah, I mean that's pretty good. That's a pretty good risk reward if you're going for the midline. It blows right through the midline, but that's about a 1 to 2 risk reward ratio. It's pretty good. It blows right through the midline, pulls back. Um, you can see that's the first clear break of this bear channel, um, and it fails and keeps going higher. And that's just way. This is way too congested to. Let's say you get short in here, and then it goes up, and then it goes down, and then this thing stalls. You're probably going to want to get out. But we get one leg up, stalls, get a second leg up. um, you got a very tight bull channel here, but I'm not so sure how you would want to get out or get in on this. If when it breaks out, you are anticipating it's going to run, I think you have to trail your stop after every bar pretty much. So I think I'm not crazy about this one. Then you can see we get this bear channel, pulls back to the EMA, it bounces, we make a new high, pulls back again, stalls before making another new high. And we're ranging here. you can see, um, it's a range. So buy low, sell high. It's not very clear where the highs are here, so I think you're better off buying, especially the bias is up anyway. So that's the 1300 tick chart. Quick look at the daily chart. The day's not over, but right now it's looking like a bull bar. I think prices are probably going to try and test 69.50. And if we look at the weekly chart, there's my target. Eventually, I think prices are going to try to hit 7,500. That might take a few months, but that's what I think prices are trying to do. Right now, it just looks like we're in a range. You can see last week was a doji. The past few weeks have just been dojis. So not a whole lot going on. If we break above last week, expect resistance. And I think on the monthly chart, I'm not expecting a whole lot. I think we're going to go sideways for several months. So anyway, that's how I saw it today. I hope everyone had a great day. I'll be back tomorrow.